Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, back again this week, joined as always by the University of Missouri's Ben Brown. Hey Ben, how's it going?
Oh, good. How are you, Will? You feeling better?
Feeling much better. Under the weather a little bit last week, right around Missouri State Fair time, but we bounced back, and now I'm back at Ohio, getting ready to start another semester at the Ohio State University. So Ben, I know you're about to get underway there in Columbia, Missouri as well.
Yeah, school started today for our students, and it seems like more and more students are taking Tuesday, Thursday classes. I don't know if that's a correct observation or not. That's just my observation. So today, even though classes started, the building's still relatively quiet. I do not anticipate that to be the case tomorrow, though. And we always, at least on our floor, we do not have a men's restroom. We have two female restrooms on our floor. So our over under is always how many times do we get asked where the men's restroom is? Is our fun game of the start of the semester.
Well, see, I think a perfect college class setup, other than limiting the number of classes you're in, would probably be having everything you can on Tuesday and Thursday, because no one wants to go to class on Monday. And you're busy on Friday, you got weekend plans, so you can't
Right.
really have that Monday, Wednesday, or Friday. So
Before we
anyway,
jump into the markets, though, I do
yeah.
want to mention it is like 110 degrees outside. And so we got the email a while ago to shut the shades in our offices and not use excess energy. So I am docile and compliant. I just want that noted.
Well, it's pretty hot in a lot of parts of the country. It's a little bit warm here in Ohio, but really not all that bad. Just the low 90s today. But it's been kind of interesting seeing how these heat swings have impacted the growing season coming into August. First couple of weeks of August in Missouri is very temperate, lots of rainfall, lots of cloud coverage, and pretty easygoing temperatures. But I guess that's kind of gone away with a vengeance here. But real quick, before we dive into too much detail, I want to give an update on where we sit this week on the commodity front. That September 23 corn crop is down 4 cents at 469. December corn down 3 cents at 482. September soybeans for the 23 year are up 36 cents at 1370. November beans up 41 cents at 1361. Soybean oil on a cents per pound basis are up 2.41 cents at 67.99. Soybean meal by the short ton is down $3.30 at 409.80. That September wheat crop for this year down 9 cents at 5.99. July wheat for next year also down 9 cents at 6.73. And then crude oil for September down 74 cents at $80.12. So Ben, a little bit softer on the corn, but some moderate gains there on the soybeans. Why did we see those adjustments between those two commodities?
Sure. And I think a good chunk of this is due to the heat that we're experiencing, right? So, to be basically flat on corn is probably a little disingenuous to the full market. We tested some contract lows on that December contract, or, some of the lowest values in December new crop corn, all the way back to like 2020. So it has been, kind of a real down couple of weeks here in the crop market. We saw a little bit of life, I think, on the forecast switching back to some hotter weather, but I would certainly say that the spreading that we're seeing between corn and soybeans right now is a little bit of due to the weather, right? Corn is largely, made. Some of this heat certainly could take some top end potential off the corn, but in large parts, the corn crop is going to be what it is at this point. However, it's the soybean crop that really is impacted, especially where this heat is on some of those later planted soybeans too. So that is where we're seeing kind of this little rally here is some upward potential potentially on the soybean market, while the corn market's maybe tapering back some expectations of a reduced yield.
So Ben, also on the soybean front, looking at the NOPA report, the National Oilseed Processors Association, they released some crush numbers for soybeans that were both up on the month from June to July and up from last July as well. Is that helping maybe boost some confidence there in the overall soybean market as well?
Yeah, I think it is. The July report was pretty bullish. We set a new month of July record at 173.3 million bushels crushed in the U.S. in July. I can't remember, but I'm pretty confident to say I think we've already had 4 new monthly records here in maybe the last 5 months. We've set not all-time records, but single month records, and that's noteworthy, right? July and June are times of the year when a lot of people don't have soybeans in storage, and so we see facilities take a little bit of a step back to do some maintenance. They're having to bid higher for soybean basis. So we just to set monthly records here in a year where we had tight kind of supplies last year. We are expected to have tight supplies again this year, and yet we're still seeing some of these large values. So I think that's notable. I'd also say the soybean oil stocks number was just extremely surprising from the standpoint of how low of a stocks number we had in soybean oil. That signals very strong use for the month of July. Just kind of keeps feeding into this this notion that we're going to use more and more for domestic fuels. And that's certainly another indicator is certainly represented by the fact that soybean oil at the Gulf of Mexico is trading at such a strong premium to other vegetable oils around the globe. Signals that we're using that product here in the United States.
And Ben, looking at where we sit on both a supply and demand front, I feel like this mid to late part of August, it's an interesting pivot point because we're starting to wind down the bulk of the summer driving season. That's going to start really tracking down there into September. And so you might see that biofuel demand drop accordingly. But then also, you're creeping into harvest season and harvest times here. So how do we see the, different supply and demand factors as we, slide from August into September? What should be at the top of people's radars?
Yeah, so I think as we round out this marketing year, right? So for corn and soybeans, the end of the marketing year is August 31st. So as we round the end of the marketing year and start thinking about next year, the biggest demand category that we're really going to watch on the corn side is feed use, because so much of corn used for feed is used during the first half of the marketing year. So that's a big one to watch. I do have concerns in that complex. Profitability in pork and poultry has been extremely low. We've seen high basis values in cattle feeding areas, plus the cattle on feed report last week, I think, came in at like 97.7% of cattle on feed last year. So that was my very short livestock market outlook for our friends Megan and Scott that do livestock. I do have some concerns in that complex for at least maybe 8 months here, to where profitability is low and just low volume to be able to use that product. The other thing that still continues to concern me is on the export side. When we look at like new crop sales, right? So these are shipments that will be made sometime during the next marketing year. I'll start with the corn side. Corn early season sales are 26% below where we were last year. And yet USDA is currently anticipating a 26% increase year over year in corn exports. Okay, so that's a big difference to be at a 26% deficit, and the expectation is a 26% year over year increase. Could we get that on a big corn supply? Sure, we could get there, but I'll be watching that very closely, and namely a couple of key markets: China, Mexico, Japan, Korea. Those are going to be key markets to watch on the corn side. On the soybean side, we did see USDA lower that new crop soybean export value there in August, or here in August. But I still think that there's a challenge of getting that many soybeans exported to the globe when we're sitting here thinking about the potential of a very large Brazil, South America, but namely Brazil soybean crop. So we'll have to watch that, and that'll probably be the next thing is South America weather.
Well, and just on that, before we switch into the new marketing year, you kind of look back at this marketing year. It's been one on an export front that's been characterized by, I guess, linear disappointment. You keep thinking that maybe more products will be moving out of the United States as we kind of move along, but it seemed like a lot of that never really came into fruition. So do you see that story maybe changing into a different tune as we enter the new marketing year?
Well, we've seen some flash sales lately, and that's largely because we're starting to become more price competitive on the global market. You look at freight on board bids at the port of New Orleans, and we're moving closer and closer to some of our major competitors in the global market. So, that has led for some of these bites, if you will, back into the export market. If I think about export sales this last week, both for new and old crop, it wasn't a terrible week. We saw support for the complex on strong new crop sales. There's not a lot of time to make shipments here in the old marketing year, so we kind of throw those to the side for now and think about the new marketing year. And so, yeah, I think profitability is going to give us some opportunity here, but I'm hesitant to say that the market has changed mentalities to say, hey, we're going to have a good export season. I think we're still kind of in this mentality of exports are really soft. That's a demands category that's been very weak for quite a long time, and I think the mentality is it's just still weak.
And then Ben, I'd really like to end the focus of today's episode, kind of maybe back to where we started, looking at the weather, looking at what's coming down the line here across the Midwest, and then as you dip in further south, we're looking at potentially a lot of low 90-degree temperatures on the Eastern Corn Belt, maybe a little bit warmer in the Western Corn Belt. So what are your expectations as traders and producers are really paying attention to these weather patterns as we wrap up the month of August?
Yeah, so the Pro Farmer Crop Tour is going on this week, and we're going to see all sorts of social media chatter, and of course, there's always the debate about whether they, should be doing this, right? Like it's always an interesting battle a little bit in terms of you got some people on one side that are really excited about it because it's verifying that their yields are very low. You've got other people that are like, I don't want you seeing my very strong crop yields, right? And get out of my field. You're just suppressing the market. So long story short is this is something that I don't care which side you're on. Very few people, are in agreement, and it creates for some interesting discussion on social media. So I'll just say that. More to your question, it's a substantive answer here is I'm very interested in some of the reports and some of the findings, I guess, if you will, observations later in this week. So here Monday and Tuesday, arguably they're going to be in some of the better growing areas of the Corn Belt. I anticipate those yields to be strong and good reports, but as we move through the week, I anticipate getting into some of those, harder hit areas, some of these areas, impacted by heavy or heat at the moment, high heat. And I'll be looking for tip back. How big is that tip back on ears? I'll be looking at the soybean. Is their pod, is our pods being abandoned due to the high heat? So those are things that I'll be interested to hear as we work our way through the week.
And then Ben, just for our listeners, can you kind of highlight real quickly the tour of that? What's the route?
Yeah, so there's two legs. One starts in kind of the upper, in the upper plains in the Dakotas and comes down through Nebraska, Iowa, works its way across. The other one starts in Indiana this year. Some years it's Ohio, but this year Indiana, it kind of works their way west through Indiana, Illinois, Iowa, and kind of so far. And they meet in southern Minnesota, northern Iowa. So I'm not actually sure where they're meeting at, to be truthfully honest, on the back end. But that's kind of the route of where things are trending. So it's really the part that I'm interested in is that Iowa, that northern Iowa region, that western Illinois. Those are areas where I'm very interested to see kind of what's happening. So,
all right, Ben. Well, outside of that, what should farmers and ranchers really be paying attention to as potential market movers this week?
Well, largely everything's still the same, except for I will note that we do have the Jackson Hole Economic Symposium happening this week. This is sponsored by the Kansas City Federal Reserve at their Jackson Hole, regional office. It has kind of become a bellwether, I guess, for economic policy moving forward. The Fed chair always speaks, and I just feel like over the last half dozen years or so, the interest in this symposium has just continued to grow to see if the Federal Reserve lays out any long-term trends in their policy decision. So we don't have another Fed interest rate meeting until later in September, about a month from now. But this meeting, I think, will signal just, what the Fed is thinking regarding inflation and interest rates.
All right. Always good to know. Well, thank you, Ben. I appreciate that. Viewers, listeners, if you'd like to learn more about us and what we do, or our sister program, the weekly livestock market update that Ben gave you a little bit of insight into earlier, you can do so at brownfieldagnews.com. Thank you once again, Ben. It's always a pleasure. I'm Will Robinson on Brownfield.